What's up guys, welcome back to another video. Today we're going to be talking about how many stocks you should actually own in your portfolio. This is a question that's been asked pretty often. A lot of people are starting out investing and they are not sure how many companies they should be investing in. There really is no set answer. It depends on your risk tolerance as well as your financial goals. So a big part of it is the risk to reward ratio, because the more stocks that you own, the less reward you will have, and likewise the less stocks you own, the more reward you can potentially gain. This is because stocks are pretty volatile, and investing in individual stocks, the price fluctuates pretty heavily. So if you have more stocks, your portfolio is more diversified and it won't move as much. It won't gain as much and it won't drop as much, assuming you have a fairly diversified portfolio. Emotional factor is another big deal, because if you are an emotional person, it would be better to own more stocks because the price of your portfolio won't be fluctuating as much. Whereas if you aren't really that emotional, you should do less stocks because there is more reward to be gained there. You could have some really red days where you're down maybe 20%. It could give you a heart attack. And you could also have really green days where you're up 50%. It all depends on the amount of different companies that you own. So here are some mistakes. The main one I see is people have too many stocks. They try to buy a little piece of every single company, and at that point you might as well just buy an ETF like SPY or VTI, which tracks the S&P 500, or VTI tracks the total stock market index. By doing this, investing in an ETF rather than hundreds of stocks, it is a lot easier to manage and it makes your life a lot simpler. On the contrary, I see people investing in too little stocks. This means that people choose one or two stocks and they invest their entire portfolio into it, basically putting their eggs into one basket. Now this isn't really good, because if the company ends up failing, you will lose your entire portfolio. Now, if you do invest in just one or two companies, there is a really big risk-reward ratio there, as you mentioned in the previous slide, but it is not really worth the risk. You're pretty much gambling your money at that point. And the third mistake would be choosing bad companies. Bad companies include companies that aren't generating positive revenue, such as Macy's or Bed Bath & Beyond. GameStop and AMC. These are meme stocks right now, but they were really bad. They had really bad earnings these past quarters until they had these bailouts from the Microsoft deal and a $900 million financing for AMC. That's about it. Thanks for watching.